Hey everybody, welcome back to another edition of Market Talks with Dr. Stocks. This time I'm coming to you from the live options room, which is our second of two live trading rooms that I manage throughout the trading day. This one trades exclusively options. We've been in business for about 5 months now, a little over 5 months. We're doing really well. We just hit a new all-time high as of this morning from our launch back in January of this year. And it is now the 3rd of June. We're coming into the end of quarter two. We've had most of the big earnings out of the way. And the market is now very much anticipating the jobs numbers that will be coming out tomorrow. Wednesday, we get ADP. Thursday, we get jobless claims. And Friday, we get the big, all important jobs reading on non-farm payrolls and unemployment rate. So all of that's to come. I think we'll probably be okay. We had a good JOLTS number out this morning. Market took that in stride. Markets are in rally mode, nothing huge, but the real concern, of course, is the ongoing tariff negotiations. And there are some hints this week. We've had so far some hints of some movement with China. That's the biggie. And if we can get China to the table and have some sort of agreement and get things firm and undisturbed, everything keeps changing on a day to day basis. Every tweet gives us some new perspective. But if we can get something firm that everybody can agree on is at least good for both sides, then the market should really go crazy. The risk right now is not to the downside, it's to the upside. So if you're heavy short, you don't want to be heavy short because you're taking on, in my opinion, you're taking on too much risk. Okay, so let's get started. We're here on the homepage of drstocks.com. That's drstoxx.com. We've been in business every market day since October of 2002. And if you want to join us here in the live options room, you go to the subscribe button, scroll down to the live options room, click on that. You'll get a introduction to the room, some of our performance statistics, and you can sign up from there. And if you want to add on the room where this one's been in business for about 5 years, where we trade stocks, exchange traded funds, micro e-minis. We don't do options now in the live trading room, but I'm in both rooms all throughout the day. I jump on the live mic in the afternoons to do some training. And if you want to add on both, you can do that for a discount. Okay, enough about that. Let's take a look at some charts. So I've been talking in both rooms for the last couple of weeks about a trading system that I can't take credit for. It belongs to a friend of mine. I'm in a pro trading group. We share ideas. Most trading days, we jump in there and we share what we see moving in the market. And sometimes I get some really, really good ideas from those in the group. All the guys in the group are trading full time. Some manage funds. Some work for big professional firms. And everybody in there has very, very good experience trading stocks. So we share what we're seeing in the market. And, I only have two eyes and I only have one brain. So if I can multiply that by about 20, then, it really helps. Really, really helps. So there's a guy in the room that has developed a system for uh, finding stocks that lounge around the lows of the year, the 52-week lows, and they don't really do much when they're down there. If you took 100 stocks that are trading at the 52-week lows and you followed them for a year, you're not going to get a very good return. Whereas stocks up at the 52-week highs, follow those for a year, you're going to get a much better return. There are exceptions to that, however, and you just have to know what shows up in the chart and in the fundamentals of the company in a stock that is out of favor with the market, but is about to step back into favor. Those are the guys that really can give you big returns. In fact, I have a whole trading manual on this idea of trading stocks down at the bottom that are poised to rally 20, 30, 40, 50% in just a matter of weeks. I call it my 50% in a month manual. If you're interested in that, go to drstocks.com, click on the Learn to Trade menu, and you'll find a link there for the manuals. And I have a very similar system to this guy, but I think he actually has a little bit of a better edge than I have. My system requires a little bit of work, right? You've got to look at towel is falling off here. you've got to look at patterns, you've got to look at volume, you've got to look at growth numbers, valuation numbers. It's a little more complicated, perhaps. But here's his system, right? So the idea is that, let me get a stock that we're actually in, XMCR. Hold on. XNCR. This is a stock that I brought to the attention of the room a few days ago when it triggered a new buy signal per this guy's system. Here's the system. When the RSI 14 period look back goes under 40, not 30, that's the default number, but it goes under 40, and at the same time, the MACD set at the standard periodicities, 12, 9, 26. If the MACD makes a bullish crossover of the signal line over the smoothing line, that's the black line over the green line, from below the zero line, right? The zero line is your line in the sand for MACD. If it's below the zero, it's a downtrending stock. If it's above the zero, it's an uptrending stock. So we want it below the zero line, but we need a bullish crossover. That first green histogram bar is your signal. That's your buy signal. Now, the RSI on that day has to be below 40, as it was on, where's the date? Where's the date? That's the first bar right there. That's your first buy bar. So it went from XNCR went from 857 all the way up on an intraday basis to 1250 in just about 2 weeks, less than 2 weeks. That's a big move. That's a 50% move. That's my manual, right? 50% in a month. Well, this is 50% in a couple of weeks. Then it came right back in, but it is now printing a higher low, not incredibly higher low, but here's your first low that triggered the buy signal, and here is the subsequent low, which just a smidge higher. We also have an Adam and Eve bottom. You've got a sharp V bottom followed by a rounded bottom, and that in and of itself is a very bullish pattern. So we've got the system, right? RSI below 40, coupled with a bullish MACD crossover from below the zero line. That's your buy signal. Now, you don't want to buy every stock that satisfies those requirements, because you're going to have, first of all, a long list of those, and most of them aren't really worth buying. Right? They're stocks that are down at the bottom for a reason. They just happen to have a couple of days, a dead cat bounce, or a little bit of a short squeeze, things like that. That's why they're bouncing, and that's why they give you the MACD buy signal. But you really need to dig down into these companies to see which ones are worth buying and holding on to for a little while. You also have to know where to put your stop. You have to know where your first target levels are. And that requires a little bit of trading experience, and that's not contained in the system that I just described. But a couple of hints that I can give you right now. One is, when you do get a buy signal, there was another buy signal right down in here, right? RSI below 40, as it was, I think, right on that day right there. And that was the first day of 3 new MACD histogram bars on the upside. That's your buy signal. The first buy signal, I guess, is that day right there. Take a look at the day of the buy signal. Is it giving me above average volume? That's important. We don't want to get into a trade that nobody else is getting into. We want to get into a trade that's going to be a crowded trade. We want people to plow into those shares. And they did. That was a big bar right there. It's starting to taper off right now. Maybe this move is about to peter out, but we'll just keep raising our stop and seeing where it goes. Your first target, of course, would be the fulcrum up here around 1138. And if we bought it down here at, let's say, 790, that's where I bought my shares. That's another 40, 50% move, right? Really, really nice. More than 50%, I think, 55% or so. And we're about a third of the way there, if even more than that. Okay, so that's the system, but let me show you a couple of ways that you can whittle out the best candidates for rising off the bottom from the worst. And in my manual, I give you some very detailed things that you can do, and it's very easy, actually. I said it's complicated, but it's just a matter of looking at some numbers, and you're looking for green numbers more than red numbers on one side of the equation and green numbers more than red numbers on the other side. And if you can visualize that, then you've got a good candidate. One of the things I like to do, however, and this is not in my manual, I like to go over to, let me see, let me go here first. And then where's TipRanks? Oh, I'm covering it up with the, okay, we'll do it that way. All right, so TipRanks is a site, I've mentioned this before, that ranks analysts by how successful they are in terms of whether their buy signals, their buy calls go higher within the next 12 months and how much higher. And then they get a rating. And TipRanks is very good at showing you the top analysts, top 10, top 15 analysts out of the 7,000 professional investment analysts that are out there. The top 10, 15%, top 10 or 15 analysts are the only ones really worth looking at. And they'll all get a 5-star. And they're over 50% success rate and typically 20% or more on the ROI over the next 12 months every time they issue a buy upgrade or a strong buy or a reiteration of a buy or a raise in the price target. They manage all of those things. Okay, so let's type in XNCR and I'll show you what we're looking for here. So of the analysts that cover XNCR, there are actually 11 analysts that cover it. There's a one guy at a sell. Okay, well, which one is he? Which one is the sell? This guy right here. He doesn't even have any stars. Peter Lawson has no stars. His average return is a negative 10%. His success rate is a 36%. He's not even worth worrying about. But everyone else is on a buy signal, and that means a strong buy, right? 10 out of 11 analysts are on a buy signal for this particular stock. And if you look at where they think the price is going to go over the next 12 months, it is way up there, right? We're looking at a stock that, what is it now? It's $9.10. Their price signal over the next 12 months is almost 200% higher than that. Okay, so is this a good candidate? Yes, it is a good candidate per this site. Okay, so that's one way you can whittle out the best from the rest. And we did this the other day with Sarepta. Sarepta also triggered a fresh buy signal. Let me show that to you. So dipped way under 40. This is a biotech stock. It's been out of favor with the market. RSI dipped way below 40, and it took a while for the MACD to start triggering a buy, and it did on that green histogram candle right there, which was up here at the top, and that was not a good place to get in. It has, however, printed a very clearly marked higher low, and it did not give a second signal, but that could be a good place, a better place to enter into this trade. So if you bought up here at 40 or so, you're probably underwater. You'd have your stop. I would assume you'd put your stop down here below the most recent pivot low. And if that's the case, then you would raise it now to about 36.30. Your target, assuming it breaks out of the fulcrum here, which is that higher low pivot high, and it got really slammed there. I mean, it went way up, right? It closed the previous day at 39.88, and then it rallied all the way up to 44 the very next day. That is a big move. Got slapped back by the market. Not ready for prime time. However, what it did that was very good is that it printed a higher low, and it looks ready to try again to break out of that 40, 41 area. And then your target's up here at 50. Why is that a target? Because if you go back several months, you're going to find that was a level of support. It's a support resistance flip line, and it also closes up the big gap there. All right, so now let's go over to TipRanks. Let's say, hey, I'm interested in SRPT because it came through on that trading system, gave me a fresh signal. Let's see how this looks over here in TipRanks. Yeah, okay, same thing, right? Strong buy. This has 24 analysts, not just 11. Big upside target of 143% above current price. And Yeah. Okay. You're going to get a lot of guys that don't have very good track records that are on board with this. So you kind of want to look for a guy that might have a better track record. You also want to look for analyst firms that are very good. Jeffries is your number one analyst firm in the nation or in the world, probably. And so a guy that works for Jeffries, maybe personally he's not that great, but he wouldn't be working for the number one firm in the world if he didn't know what he was doing. So the Jeffries guy, right? He's on a buy. This was just a couple of weeks ago, 223% upside. The second biggest, best firm in the world is RBC. I'm looking for, there it is, RBC. And this guy has a lower price target, and this was about 3 weeks ago, but he's on a hold. Okay, well, he's not bearish anyway. There you go. So some ways of tweaking that system a little bit to get you into trades that are most likely to produce a positive return. The one that I mentioned in the other room, and I think I mentioned it in both rooms today, is this Aniq. Today is the very day of printing that buy signal. Here is your RSI below 40, and here is your fresh MACD buy signal, and you can see it is pushing nicely off this pretty well established support line. Not a good looking chart. None of these are going to be good looking charts. These are all downtrending stocks or stocks that have gone flat for a long time. What we're looking for here is what we're looking for here is a high percentage play on a bounce that will be sustained at least for a couple of weeks. We're just looking for a bounce that will allow us to move our stop up into profit territory, and we keep trailing that stop higher and higher until we get stopped out. We could also put a target price up here. Your target price is probably going to be 13. Yeah, 13. It's at 1177. That's not a real big return. But if we want to close that gap, then your target is 1450. That's maybe a little bit more interesting for us. I'm just curious. I don't think I did look at Aniq here. Yeah, okay. Only 3 analysts, so it's not a big, it's not a critical mass of people, but it is a strong buy with a big upside target, so it satisfies that requirement. So that's all I wanted to say about that. I probably will shut up about that trading system for a while because I've talked too much about it, and I'm just going to let it go. Okay, let's look at some charts, and I will take some chart requests. So we've got a beautiful bullish setup here in most of our indexes and in most of the key stocks, the leading stocks. Here are your all-time highs. It got up there 3 times last year, twice this year, got up there and got rejected. Now, that's the target. Your target is up here above 6,100, 6,150. This is the micro E-mini, I should point out. This is not the SPX, which is going to be a little bit lower in terms of price, 20 points lower, not a big deal. But it gives us, the levels are the same, and the price ratio between current price and all-time high is the same. And you can see, you're going to find this pattern all over the place, right? This is the tariff pattern. I don't know why. The tariff pattern started in March with a bit of weakness, and then, it was, what was it, Liberation Day? Liberation Day, Trump came out and said 50%, 50%, and then it went up from there to 100 and something percent on China, on Europe, on everybody and their mother, and that crashed us down to the early April lows, and it was a crash. This was not a bear market move. This was not. This was panic. It was just pure panic on the market's part. Totally overdone. Totally way beyond what the reality was at the time, because these were just negotiating tactics, and Trump being Trump, it was not, not something that should have moved the market that far. And in the meantime, Trump has scaled back a lot on China. He's made a few deals along the way. Europe has a deadline now that they didn't have before. They're probably going to come to the table. And we've got Trump talking with Xi over the weekend. We're going to get another weekend rug pull for the bears, I'm pretty sure. We'll come out with something positive. The futures will flash way up on Monday morning. You don't want to be short Friday going into another China weekend. So bullish bottoming pattern right here. And I think if we were to scale back, we'd probably say this is a topping pattern or a continuation pattern at the top of an uptrend, not not a bottom. I mean, it was the bottom of the head was the bottom of the panic move. But this is just perfect, just so perfectly formed. It's almost too perfect. I'm kind of thinking, when are they gonna when are they gonna just lure us all in, get heavy, heavy long because the chart looks so good and the market looks so good and we're getting close to all-time highs, and then they come out with something that just crashes the market again. I don't think that's going to happen, but it certainly could because everything just looks too good, almost too good, right? Anyway, it we can enjoy. We put our SPXL calls into the bank, took a nice profit on that, rolled that out into XLK, and what was the other one we bought today? And we did some Pinterest, we did some Tesla, we've got all kinds of stuff on. Okay, so yeah, so SPY looks great. Nothing bearish about this pattern at all. Nothing bearish in the chart. Pretty much the same story for the Nasdaq, only we're a little bit closer to all-time highs. We're a little closer to all-time highs, and let me make sure this is there. We go. So we're almost there, and we're moving. We are really moving. This isn't even a head and shoulders pattern because the left shoulder and the neckline here are too far removed from the right shoulder and its neckline. So that's not a head and shoulders, but it is, I would have to call it a nice looking cup and handle continuation, or cup and handle bottom. It's not really that either. Moving into, this is just bullish 101. I mean, maybe it's not even a cup and handle. Maybe it's just a bullish flag, right? Bull flag. Bull flags run on flagpoles. So here's your first flagpole. Here's your first, sorry, do that again. First flagpole, first flag, second flagpole, second flag, third flagpole, third flag, and now we're in the middle of a fourth flagpole, and that's just how the markets move, right? It's always 3 steps forward, 2 steps back. And we just did our 2 steps back. So that's done. We're breaking out on top of that range, and everything just looks great. Absolutely great. So, yeah, should we put on some TQQQ calls by the end of the day? Yeah, I think we might. All right, now how about the small caps? So the small caps, I've been saying this a lot, aren't looking as good as the other indexes. They're way below all-time highs. They're well below 52-week highs, and they've just been plowed under because the rates have been so high, right? Lending rates are so high that squeezes margins, and there are other reasons for problems with the small caps as well. And of course, the tariff uncertainty for a small company, which is totally reliant on China goods, China products, cheap labor, not that kind of stuff, just having a real hard time, right? Real hard time. So here's the good news, though. And I think this is a bottoming pattern. This is not a topping continuation pattern. This is a bottoming pattern right here. And it is very perfectly formed. And I'm not the only guy to see this. There are a lot of professional guys in my group that are showing us the same thing. And we are knocking on that neckline. And I think I'm not so sure today is the best day to buy the small caps. Maybe a couple more days of some churn underneath that neckline, but it will be breaking out very soon. There's just no holding back. It would be really great, if we had a bit of a softer non-farm payrolls number on Friday, because that means the Fed is more likely to cut rates sooner rather than later. I think we're going to get 3 cuts by the end of the year. I don't think they can continue on the break because of the falling inflation. If tariffs kick in and we get all kinds of horrible inflation, it's a different story. But right now, there's no inflation, and the labor market is still good. And the Fed needs to get ahead of the curve and not delay too long in softening the bear market that they sent us into back in 2022 when they were raising rates. they did a little too much, a little too fast, and now they have to start backpedaling on that. Okay, so small caps look really good. Nasdaq looks really good. S&P looks really good. Oil is up, 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 and it's ready to do a bullish breakout. That's not such a good thing. Higher oil, higher gas. It's a tax. We get less profit, um, and it costs more to ship stuff. Bitcoin, really nice looking pullback here. I'm not convinced yet that this pullback is done, and today's fall off the highs is kind of helping me think about that. I'm thinking that Bitcoin is doing an ABC pullback here. We've had the A wave. We're in the middle of the B wave, and we should get um, a little more downside here just to factor that in. And let me see where the 50 is. Where is the 50? There it is. I don't think it's going to get all the way down to the 50, but maybe it's where is some of our levels of resistance? Yeah, there is a resistance trend line there that you can see how it consolidated right around that line, and then we pushed off of it. I think we'll probably come back and test that line right around 102.5, and that is when I want to get us back into Bitcoin. I could be totally wrong. It could just go skyrocketing from here, and there are some political rumblings about crypto stuff going on that should help. But I just think we're going to get a little bit more downside, and I don't want to get in too early. Gold is doing great. It's a little soft today, but it had a big up day yesterday, and this is illustrating my big green stick rule, right? So you don't want to buy on a big green stick. If you see one, you're going to be buying at the top. You're much more likely to get a better price the next day. Big green stick, 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 better price the next day. I hope you got the hint. Okay. 10-year yields, they're not super high today, but this is kind of forming a bullish pattern. We don't want to see that. We don't want to see yields go up. There is your bullish pattern. Now, it could simply be a rising wedge, and that would be great. It just needs to roll over and break to the downside, and it needs to get back below the 21 and then break to the 50, and it just keep falling. We want to see yields come down. When yields come down, um, not only bonds go up, and that's good for the corporations that are selling those bonds and the government selling the bonds, but it also means lending rates come down too, mortgage rates, car loans, and all of that. Okay, so that's that. Let me show you some greens, some stocks that are setting up nicely on my greens list. I've got a good, healthy set of them. I just went through them an hour ago to weed out some of those that may not be looking so good right now. We're already in some of these in both rooms. I'm also in some of them in my trend trade letter, my ETF trend letter. But let's take a look, right? So let's just go through these weakest. Make sure this is still that true. Yeah, weakest to best. So SoFi is it's a credit lending slash bank kind of play and has some really, really good growth. It's undervalued in my opinion, but it's just not getting much traction yet from the market. So I've got an eye on it, and I've got an eye on this. There it is. There's that same pattern, right? There it is, or maybe that's the. So we want to see it start to get some upside traction, and it started to get that yesterday. We had a couple of days of above average volume, light volume pullback today. We'll see where it goes tomorrow. I like SoFi as a longer term hold on valuation, not necessarily on relative strength, because it's not showing much of that just yet. Amazon is giving us this bull flag. You know, we're seeing this a lot or pennant. We're seeing this a lot in tech stocks. It's been kind of beaten down. It's not Apple and Amazon. Is it Google? They're like three of the mags are underperforming. I know Apple for sure. And Amazon are two of the mags that are underperforming off of the April lows. And I kind of think that Amazon will start to outperform in order to catch up. The growth here is just so good, and as long as the consumer stays good, and what is their AWS service. I'm forgetting what it's called, but that is producing lots of revenue. And they're jumping into AI and they're jumping into data centers and all kinds of good stuff. So uh, watch this pattern. It's not a buy yet, but it is setting up nicely. TTD is used to be one of my favorite software companies. It is it's like a fintech play, and they reported really, really good earnings, and they haven't closed that earnings gap. So here's a clue. If you want to buy a stock after they report really good earnings because you think it's got a great future, wait a few days to see if that gap stays open, maybe a couple of weeks even. If it stays open, that means that the market has accepted the earnings as a revaluation of the company. No longer is it a $40 stock, it's now a $70 stock. That's a big revaluation. And this is doing just exactly that. It is consolidating on that new valuation, but it's not closing the gap. This is a pretty safe, lower risk kind of trade. Your target is going to be, way up here. You've got to close the gap, and then we aim for the all-time highs around 140, and that's a good 90% above current price. So I'm not so sure it's a buy today, but it's getting there, and it's forming this nice little apex. And I know the fundamental growth future prospects are very good. We're long some jet calls. It's just lounging around, but it's up at the top of this range. Again, it's this cup and handle, inverted head and shoulders, bull flag, whatever you want to call it. It's just a bullish pattern. And look at this volume, huge volume today. And I think it's just a matter of time before this breaks out and prints a new leg on the seasonal tailwinds of summer. BABA is deeply undervalued. It's not doing a whole lot in terms of price just yet. So it's a watch. It's not a hold. It's a hold, but it's not a buy just yet. But it is holding this supporting trend line quite nicely. And I just want to see some good volume coming in, a green candle that takes out a sequence of higher previous highs. So if these little highs right here, if they get taken out and we close into that gap, maybe about 117 on good volume, I'm interested. PLTR is in breakout mode. It's all-time highs. This is leading the market higher. It is a leading stock in software and defense with all kinds of new contracts. And the thing about PLTR, it's interesting. Analysts don't like it. They're all on a hold, or some even are at a sell, and they've got price targets below current price. I don't get it, because every time the market starts thinking about PLTR, it goes up. Market just whispers the name and the stock goes up. So market clearly loves it. Analysts don't, and I don't understand the disconnect there, but it's interesting, and that should keep things heading higher. PayPal, another undervalued name, and this is the line I want to see break before I'm interested. That right there, keep an eye on it, because it has several new product lines. It's got a new card coming out. They're talking about there was a collaboration with a big company. I'm forgetting which one it is. So William O'Neill, founder of Investors Business Daily, author of the best trading book, in my opinion, even better than mine, my 3 books. He said that you want to look for in a stock you're going to buy for the longer term. You want to look for new things, right? A new CEO, a new product line, a new branding, new. You want something new, and PayPal has that. It has that already. Datadog, one of my favorite software companies, fell out of favor with the market. Too much competition. Now climbing its way back. It is a great product. If you talk to any of the enterprises, anybody that works for a company that uses Datadog, they love it, love it, love it. And it just needs to find a way to make their margins a little bit bigger. Software, of course, it's all about margins. So they're moving back. I think they're moving in the right direction. And look at this volume under deep accumulation. Beautiful looking. Let's call it a head and shoulders. Not a head and shoulders. Let's call it a cup and handle. Perfectly formed. You've got a gap up here. That's way up at 145. The stock's only 118. Maybe we get some calls in this one today. CNI is a boring railroad stock. We are long calls, and I put them on a couple of days too soon. Yesterday was a flush out day on heavy volume. That's always good to see. So here's a good tip. Very good trading tip. Sorry, I keep doing Um, when a stock is pulling back, pulling back, pulling back, pulling back, you get a long candle to the downside that goes below a level of support. In this case, the 21 period moving average. That's a key moving average for the short term trend. Goes below that moving average, heavy volume, and then rallies back up to close well above that moving average. That is your buy signal, right? That is a classic move. You scare out the weak hands, you chase away the bulls. You get the guys that bought up in here and they got their stops under the 21, which is probably where they should have it. And they got stopped out yesterday. And then they're on the sidelines. And, if everybody that wanted to get out of the stock has gotten out, it can only go up. That's what we're seeing today. Today is a classic reversal of a slam move that was a trap. It was a bear trap on heavy volume. So we're going to hold our calls. It's not going to be a big trade for us, but 40, 50% I think is doable if we can get back up here into the low teens above 100. We saw that Tesla. We've got some Tesla calls in the options room. It's just kind of going sideways. It's in this tight trading range like a lot of tech stocks. But here's the thing. Here's the thing. I've said this so many times. Here's the April 7th low, right? The panic low that triggered a more than a bear market fall in the Nasdaq and the S&P. Everything was hitting the lows of the year to date and even 52-week lows on that day, April 7th, right? That was the bottom. Tesla did not. Tesla was still well above its lows of the year, and it has been all upside from there. It hit a low of 220 and rallied all the way up to 370. And if you figure out what that is, that's about a 50% run. No, maybe more than that. 147 points on a $220 stock. Yeah, that's really more like a 65, 70% run. None of the mags did anything like that. So Tesla is leading the pack in terms of outperformance above the April 7th lows. We've got Musk coming back into Tesla. That's a very good thing. And yeah, go with the leaders. Go with the guys that are doing really well. And 90% of the time, you'll end up doing okay. QBTS is a quantum computing company. Both QBTS, RGTI, those are the two that I usually look at in this space. And we're long RGTI in the options room, and we're long QBTS in the live trading room. Both of them, you don't look at them for fundamentals. This is all about future growth, right? They don't have a whole lot of revenue coming in. They've both got tiny floats. They're high risk trades. But this is the space that you want to have some exposure to over the next 2 or 3 years. So we'll be in and out of these stocks. The thing you can do to trade the whole space is go with Quantum QTUM, which is an exchange traded fund. It has these little guys in it. In fact, I think QBTS is the biggest holding, but it also has the bigger players that are involved in quantum computing. ARKK, always a good thing to keep track of this group. This is the Cathie Wood, right? Here's your cup and handle, or possibly head and shoulders. I really don't care which one it is. I'm not much of a pattern trader anyway, but the one thing I'm interested in is that it's banging up against this tight 3-week range. This is what qualifies as a high tight base breakouts. One of the strongest bullish signals in the market. So if ARKK, which is a lot of Tesla, but it's also a lot of stuff that is down near 52-week lows, if ARKK can do really well in this market, anything can do really well. So let's keep a track on that. And I'm not opposed to putting on some calls in that one. We went long some AMD in the other room, the live trading room this morning. It's a longer term hold. It's in our recovery portfolio. I'm sorry, our wealth building portfolio. And like everything else, it's printing this inverted head and shoulders. It is deeply undervalued, and I think it's going to play some catch up over the next few months. Airbnb, we're long calls. It's having a very good day. We're back above our entry price today. ARM, a semiconductor, um, broke out of its inverted head and shoulders, came back to test the neckline in the 21 and bouncing off today. It's just the volume has been a little light, and I don't think the conviction is there for ARM as it is for some of the other semicons. EME is in breakout mode, doing really nice, heavy volume. What else? Pinterest, we're long calls here on the big gap up. MicroStrategy is a play on Bitcoin. It's nice pullback and a bounce. And that's about it. All right, guys, I'm going to take about 5 minutes here and look at some charts you are interested in, charts we haven't talked about already. So if you want to type some ticker symbols into the live option trades room, just the ticker symbol, I will take a look at it. If you're interested in it as a short, let me know. But otherwise, just type the ticker symbol. All right, Felipe, let's take a look at UPS. So we had a modestly hedged position on an UPS, and I'm forgetting how it came out, but I don't think it came out very well. I think we had to take a loss on that. It did trigger back in this area the system buy signal that I mentioned before, right? The RSI below 40, and here's your first MACD buy signal on that date right there. That was down at 96.64. It's up a little higher than that. I would have to say that this is making moves in the right direction. Now, UPS is going to do horrible if we go into a recession. I don't think that's going to happen. It will not do very well if gas prices keep going up because that cuts into its overhead. And it won't do very well if tariffs get tacked on to a whole bunch of consumer goods and nobody's buying stuff. So those three things, they can all happen. I don't think the recession will happen. Oil is probably a temporary glitch on the geopolitical tension. And the tariffs, I don't think, are going to be a net loss for us. So UPS is it's undervalued, and it's UPS, right? So it's not going to go away. And you are seeing a good bullish base. Bullish base need 2 months of sideways price action. And you want to, in a bullish base, when it's bullish, you want to look for higher swing lows. And that's kind of what we got, right? Here's the top of the base right up here. And you can see that within that base, we're getting a sequence of higher lows, right? So that's all good. That's bullish. It's not a buy, technically speaking, until it breaks the upside. So about 101, 101.50, let's call it that. But it's getting there, right? It's at 98.20. So that's, yeah, I kind of like it. I like it as a recovery play, a long-term play. It's not going to be very exciting. It's not going to make you wealthy, but I would have to say that it's starting to look impressive here. All right, that's UPS. Snow. I'm glad you asked about Snow because it's one of my favorites. I have shares of Snow in the long-term family fund, and it hasn't been performing that well for me, but now it's back up above where I bought it. Bought it a couple of years ago, and you can see it just was a lot of sideways, and it really came down for the all-time highs. It was up above 400, and I bought it during the bear market 2022. I think it was kind of in this area, and I bought some more up here, and I probably bought some more up here, and then it was down. It went below my average price. Now it's back above. I'm happy. It's a hold for me, and I'm not so sure it's a buy right now because it did go up on earnings. The gap has stayed open. That's my earnings rule. But I don't think it's quite long enough to confirm that. So now, if tech stocks keep going up, software plays keep going up, and if we can see these software names that have been beaten down start coming back up with expanding margins and expanding sales rates, you're going to see Snow do really well because it's like Datadog. It's a really good product and well loved by the companies that use it. So here's your thing. It's certainly a hold. There's your line in the sand. You don't want to see it go below that. If it does, then you want to get out. And I wouldn't be buying it today. I would let it cool off a little bit. Looks like it wants to do that. But down here in this little range, maybe 201 or so, pick up some shares there. If you're already long, it's a hold. Don't sell it. I think it's got some good upside over the next few months. Bull. So every time we look at this, I have to say the same thing. No, 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 no. It's a no-go zone, and it hasn't gotten any better, and nobody likes it, and the market is saying we're just not interested. Yeah, I know it shot way up. That was hype, and it hasn't been able to live up to that. It got up to, what, 80 and came down to 10. No, stay away. That's a no-go zone as far as I'm concerned. Definitely a no-go zone. Okay. That's it, guys. I'm going to let you go. Have a great rest of the afternoon. I will produce this video, put a link in the room, and then we'll trade the last hour together. God bless everybody. See you back in the room in a little bit.